Skills, technical analysis, fundamental statistics, along with reviewing my current positions and the price chart. Starting off the price action, we do have a potential cup and handle formation. Potentially, you may be wondering, what the heck, Brandon? This is no cup and handle. This is actually the start of it. We would go something like this, and then like that. That is what could happen. It is not that modified or irregular of a chart pattern. It's pretty nice. It's pretty clean. But the thing is, the second half of it has not formed. It is starting to form, and given a couple reasons that we're going to go over, I think this has a real possibility of happening. I'm not calling this. I'm not calling a cup and handle. I'm saying there is a potential cup and handle pattern forming right here. And if this were to come to fruition, and if we were to go basically straight up, not straight up, but pretty close to it in the next 2-3 weeks of trading, what is the price target going to be after we were to hit that 78.6% retracement level sitting at $32.43? Let's draw it up. This is how you draw a price target for a cup and handle. If this were to come to fruition, our price target would be all the way past all-time highs at $47.89, roughly. Okay, 47, mid 47s. I'm not calling that. Understand, this is potentially what will happen. If it does happen, that'll make me look like a genius because this is very calculated, right? This price chart is very calculated. But let me tell you that this is very it can definitely happen. Look in the past, okay? We've definitely had crazy uptrends before, and this is a tremendous company at an extremely undervalued price right now, sitting at $18.84. That's insane. But we have several rectangular resistance levels to get through. We've got the NASDAQ, our worst enemy, and nemesis, going to probably be trying to kill us all at one point or another. Hopefully not soon. We've got plenty of Fibonacci levels that, remember, once these are broken down and once you confirm the breakdown below these support levels, they are going to turn and act as levels of resistance. So we've got plenty of opposition to get through. But nonetheless, we are going to be watching this. We did get a bounce off this 161.8% retracement level sitting at $17. We got that bounce. A few reasons why this may happen. Number one, RSI. Relative strength index is sitting at 32.23. That is very close to oversold. You want to buy when it's more oversold and sell when it's overbought. Roughly, not always though. If it's Bitcoin or Tesla, it does not matter usually, most of the time, right? And with this stock, look, if you would have bought right here when it was overbought, you would have been fine. But it is a good indicator nonetheless. Not 100%, but it is a good indicator. I also want to look at the Bollinger Bands on the daily. This is pretty interesting. Everything is heading down, obviously, but let me tell you something. With the price action, its relationship with these Bollinger Bands is very clear. Many of you know this. When the price action dips below that Bollinger Band, what happens? It inevitably, you heard me right, inevitably, always, it's just a matter of time, it will come back up and hit that middle Bollinger Band again because, well, the middle Bollinger Band follows it a little bit, but it's not very reactive to price action. If you noticed, this doesn't even, it's not very reactive, okay? It's pretty self-explanatory. It doesn't follow like one of these, here, let me give you an example. Like the 13-day moving average, okay? The 13, you see how quick that is? You see how much lower that is than the middle Bollinger Band, right? It is not as reactive to price action, but nonetheless, that's how it works. When it goes above that middle Bollinger Band, guess what it does? It comes back down to it. And when you get closer to that bottom Bollinger Band, these act as support, these act as resistance, and this acts as both. So this is bullish because if you're looking to get an entry point into the stock, this is a great entry point right now, 1875. I think you're going to probably be seeing, inevitably, if it's just a matter of time, we're going to come back at this middle Bollinger Band. Now, the question is, when is that going to be? Is it going to be in a couple days, or is it going to be in 5 weeks when we're already downtrending and the middle Bollinger Band finally catches up? That's the question that you have to decide. But most likely, most of the time, regardless of the fundamentals, it's sooner rather than later. I will tell you that for sure. Looking at the daily moving averages, this is very bearish. Actually, we are going to get some death crossing, and we've had some minor death crossing. I don't consider these real death crosses just because the most important ones, remember, 15-day, 200-day, 55-day, 200-day. Okay, those two different pairs, right? Those two different pairs, if that makes sense, hopefully. The red one, okay, whatever. If you don't understand that, go watch the introductory video. But we do have death crossing going on, small death crossing. But fortunately for us, the 200-day AMA is still above or still below, the 15-day moving average and the 200-day moving average. Those are the two most important golden crosses. We still have them. But obviously, 55-day moving average, all of them are going to be acting as strong levels of resistance as we continue to push higher. But there is good news as well. If we look at the weekly, the price action is literally, we still have plenty of moving averages to get through, right? But we have the 200-day exponential moving average coming in, slowly rising. So if this cup and handle were just to be completely wrong, and we were to just hang out here for a while, well, guess what? That 200-day exponential moving average is going to slowly creep up and kind of support the price action eventually, right? It's probably going to be a while because the 200-day exponential is very slow moving, but nonetheless, it's going to come up and act as a little bit of support. So that is bullish for the stock. I also want to look at the MACD. On the weekly, it's looking very, very deadly, very bearish. And if we look at the daily, it's not looking it's looking bad, don't get me wrong, but it's not looking as bad because the signal line is looking like it is. The signal line is not slowing down, and the MACD line, the orange line, is. It is looking like it's trying to cross over, start to pick up some bullish momentum. Obviously, we did get a bounce off this 161.8% retracement level, so that is going to. The MACD does follow the price action a little bit, but remember, the daily price action or the daily MACD is not very reactive to price action, similar to the Bollinger Bands in the daily and the weekly, right? Remember this, okay? Every time frame that goes, every small time frame, the higher you go as far as time frames down here, right? The higher you go, the less reactive price action, the less reactive your indicators are going to be to price action. I hope that makes sense. Skills, according to Simply Wall Street, is trading below 58% of their estimate of Skills' fair value. We also have revenue forecasted growth 27%, revenue 91% growth of the last year, currently unprofitable, okay, risks, volatility. Volatility is not even a bad thing necessarily, okay, so this is just stupid. This is a legit concern, and significant insider selling. That just sounds scary. I understand, and we're going to be going over that pretty soon. So that's what we're looking at as far as some executive summaries and some key points for Skills according to Simply Wall Street. Here is our current price, $18.75. Simply Wall Street thinks a fair value for this stock is $44.89. Now, you guys know what I think about sites like these and institutions and Wall Street analysts, right? These guys fit in, they're not necessarily suits and weenie babies, as other YouTubers call them, but these guys are not what we like to go off of. But the fact that they can get this right, in my opinion, they actually realize that, hey, Skills actually has some fair value and it has a lot of value compared to its current price. Even they can't miss Skills value. So that just reaffirms and gives me more evidence and more reason to believe that my initial analysis has been correct. If we look at earnings and revenue growth forecasts, it's exactly what you want to see. Revenue is increasing a lot every year as far as analysts, the forecasting, okay? So this is exactly what you want to see. Very, very bullish. The short-term assets are $273 million, and the short-term liabilities nowhere near that. It's bullish as well. Long-term liabilities are basically nothing, so this is good news as well. Literally don't have any debt right now, which is absolutely, it's no debt. Of course, you don't want any debt. A company you're investing in, you love to see no debt, which, of course, very good as well. 0.2 years average tenure, not what you want to see. I'm not trying to just pump the stock and tell you guys only the good info. I'm trying to give you both the most interesting and important things that other people don't cover. That's what I'm trying to focus on. Their board of directors are not considered experienced. Okay, they have a new board. It's not something to freak out about. Please don't freak out. Oh my gosh, they don't have a lot of experience. Okay, not the make or break thing as far as company success, I think. Recent insider transaction. Now, this is something to maybe get a little worried about. But if you actually know a little bit about insider ownership and know what I'm going to tell you after this, it's not as alarming as you may think. We have sales. We have a lot of selling out, a lot of dollars worth. Look at this, 196 million. You kidding me? Yeah, they have been selling a lot. So it looks like they all sold at the same price, okay, that's the max price. Okay, never mind. But yeah, they have been selling a little bit. The recent insider transactions are bearish, but when you have a stock, well, if you're an insider in a company, listen to this, okay? If you have an insider in a company and you have been getting in at $10, you got in, early last year, holding for a while, nothing happens. It shoots up 4x real quick, 400% increase. Are you kidding me? Guys, these insiders are up hundreds of percent. And when they see it crashing down, they're like, oh crap. They don't know. They're not traders. They don't know what they're doing. Okay, a lot of them, at least, they might take a little bit off the table. It's nothing to get too alarmed of. Now, if they were selling all of their shares, or most of them, that is a very bearish sign, but these guys are not selling nearly all of their shares, okay? This is what I'm talking about. The individual insiders literally own 25%. Okay, general public 34%, institutions 28%. Okay, this is I mean, if this went down to like 2% or 1% or 0, that would be a big. I mean, firstly, the stock price would go down a lot. Okay, 22%, right? Because they would always selling. But if that happened, that is extremely bearish. But this is what you want to see. We've got a lot of insiders. This insider has just sold shares. It's the co-founder. It's the guy that owns 1.3 billion in shares total, I believe, according to Simply Wall Street. But he only sold 39 million, which sounds like a ton. Holy crap, $39 million insider selling? No, Brandon, I'm selling out. Don't do that, please. This is why 1.3 billion is what he has in total. He only sold 39 million. Do you realize how little that is? 10 years ago, their market that they are in, the mobile game market, was $8 billion. Now it is 68 billion. In 2025, and remember this was 3 months ago. Okay, keep that in mind. 2025 is projected to be a $150 billion market. That's more than double. Their market is going to be putting them in a very auspicious position to capitalize on this. Why do I say this with such confidence? Well, partly because the people behind Flying Eagle Acquisition Corporation, the company that merged with SKLZ to take them public, are the same people that took DraftKings public through Diamond Eagle. Yes, these are the exact same guys. What does that tell you? That tells you that although, according to Skills, or according to Simply Wall Street, when it was the management, average tenure is 1.3 years, and leadership team, whatever, the 0.02 years, right? That's true, but these guys used to do DraftKings, so they actually have more experience than that actually would lead you to believe. This is why you need to watch the whole video, okay? But this is what we're looking at. There's financials, okay? There's valuation. Okay, there you go. Ton of good stuff in there. I'll link this for you if you want. Take a look at the fundamentals. Insider ownership 27%. We've already been over this, okay? According to Fentel.io, it's a little different according to Fentel.io, but remember these sites, I think Simply Wall Street is going to be more likely to give you better information because they obviously cost money. I'm on the free plan, which, I can't even look at any more companies after this, okay? You're welcome for using my free plan for these videos. You're welcome. That's why I'm here, though. I'm trying to help you guys out as much as I can, so this is good to go. Institutional ownership, bullish. Insider ownership, very bullish. Current position, skills, price target, end of year. $50. Okay, let's zoom out here. Let's zoom out so we can actually see this. Okay, end of year bear case is $50 for skills. End of year bull case, $100 to $200. Okay, these are not updated. Okay, I should say that more often. These are not updated at all. The risk is medium. This is what we're looking at. These are my opinions. I can be wrong on these. I've been wrong before, although my track record is very, very auspicious and verified, I guess you'd say, very accurate as far as the price targets in the past. But of course, only 1 month of price targets, and this month is going to be much worse unless everything runs up next week. But still, very good track record, I think, as far as my accuracy. But anyway, that's the price target. This is not financial advice, guys. Thank you so much. I'll see you all in the next one.